Hello and good afternoon and welcome back to the live stream here at the 2025 Rural Symposium with me, Paul Harris, which today our live stream is sponsored by Aris Mining, and I have the great pleasure to be joined by Oliver Dachsel, who's the SVP, Senior Vice President of Capital Markets of Aris Mining. Oliver, thank you very much for joining us this afternoon.
Thank you for having me.
And we really appreciate your sponsorship, of course. Aris is a gold producer on a growth trajectory. You're building a couple of mines at the moment in Colombia, which will take you up to about 500,000 ounce a year of gold production. That's pretty much right in the center of the mid-tier category of gold producers. That's very much underway. That's with the current gold price. That's enabled the company's market capitalization to exceed $1 billion. Let me start there. Getting to that sort of $1 billion market cap, I imagine that opens up a new world of opportunities for you in terms of investors, potential investors, and potential deal flow. What are you seeing from that?
Couldn't agree more, Paul. And you know, what's important here is a year ago, a lot of investors saw the value opportunity, but it wasn't investable for them, for some of them back then, in the sense that we were too small from a market cap perspective and the stock was too illiquid. Today, with a market cap of $1.3 billion and much enhanced trading liquidity, we have actually become investable. And just to put another number on it, in the month of June, we traded more than $470 million worth of stock, right, between the TSX and the NYSE American. So that's a third of our market cap. And when you think about that, today the company has the type of capital markets profile where even some of the largest asset managers in the world can actually start doing the work. Doesn't necessarily mean that they're going to become shareholders ultimately, but it ticks enough boxes for them to become interested in taking a closer look at what is still a very deep value investment opportunity.
Now you mentioned you're listed on both the TSX, the Toronto Stock Exchange, and the New York Stock Exchange American market. Where do you see most trading, most action?
It's almost 50-50. I mean, our primary listing is on the TSX, but trading volume on the NYSE American has caught up significantly, and over the last month, on average, we've traded around 1.5 million shares a day in New York. So volume has grown organically to a substantial number.
You presented yesterday, Oliver, and you had a slide showing your peer group comparison, companies at similar gold production level. You're at $1.3 billion market capitalization. Most of the peers you put on there had a market capitalization or have a market capitalization of about $4 billion US. That's quite a gap. I imagine a lot of your investors are looking at you, expecting that gap to close, which means potentially substantial share price appreciation. The question is, how are you going to close that gap?
By delivering on what we set out we would do, right? And in that sense, it is, I think, exceptionally important to point out that the first of our two expansion projects completed last month, in the sense that we delivered the expansion of the processing plant at Segovia. And we delivered that project on time and within budget. And I think those type of catalysts are really, really important as investors see that we deliver on what we said we would, right? On time and within budget. And so now the next project that really will become the key focus is the bulk mining zone at Marmato. We've been building it since Q3 2023, and momentum is really building in terms of delivering that project, and we expect to deliver it in the second half of 2026. And to your question, how do I see the re-rating unfolding? As we demonstrate to the market that we are hitting on those milestones and deliver what we said we would, we will over time kind of get the recognition for the value that is being created.
It must be encouraging when you look at some of your peer group when they have delivered their mines. I'm thinking of Artemis Gold, for example. The market re-rate has been very stark, very striking.
Yeah, exactly. I mean, fortunately, there are a number of very relevant precedents that I think lend credence to what I just said in terms of that re-rating. And that concept of the Lansdowne curve is very well understood and known in the mining industry, and you do deliver that significant increase in terms of P/NAV multiple as you deliver on your growth projects. So we remain laser focused on delivering our organic growth, and that is what's going to get us from 211,000 ounces of gold production last year to more than 500,000 ounces of gold production once Segovia and Marmato are fully ramped up.
So once you hit that 500,000 ounces, it's only, a year away, a year and a half away. What then? You've got a good mine building team. What then? Is the aim to buy something else, build it?
We're in a fortunate position that we have two greenfield projects, Soto Norte in Colombia and Toro Peru in Guyana. We're currently in the process of doing major technical studies on both of them. A PFS for Soto Norte, a PEA for Toro Peru. And we will publish those studies in Q3. And then we will do everything we can to get those projects hopefully actionable in the best case scenario by 2027, right? And at that point in time, Segovia and Marmato will be fully ramped up and should be generating significant cash flow, especially in this type of gold price environment. And our project team would have the bandwidth to take on the next project, right? So we're in a very fortunate position that we have potentially that organic growth profile to go beyond 500,000 ounces. And bigger picture, the vision is to create a company with an asset portfolio of 4 to 6 operating assets in 2 to 3 countries in Latin America. And what that ultimately would give us is gold production of ideally more than 1 million ounces a year. That's kind of like the target we will be shooting for. Meaningful operational risk diversification, a reasonable level of country risk diversification, while keeping the geographic footprint tight enough so that the company still is very manageable, right? So that is ultimately what we're going for. And we are in a fortunate position that we potentially could achieve that organically, but at the same time, the strategy that has been pursued and very successfully, not just at Aris Mining, but also at the prior companies that Neil has led, Endeavour Mining and Leia Gold,
Neil
right?
Woodyer,
Neil Woodyer,
chairman, yeah.
Our CEO, is a buy and build strategy, right? And when you look at Aris Mining over the first 4 years of the existence of Aris Mining and its predecessor companies, there was a lot of M&A, in total 4 M&A transactions. Right now the emphasis is very much on building, right? And we're laser focused on that. But at some point, buying could become part of the growth strategy again, right? And ultimately it comes down to what's available, how does it shape up relative to the very attractive asset base that we already have, and how does the relative value work?
And I imagine if your share price gets up to that sort of $4 billion market capitalization, your currency with your stock is that much more potent and powerful.
It would. In that scenario, it would, yes.
Excellent. Well, congratulations. I look forward to the further results to come out of the company. Aris Mining, exciting growth company on its way to 500,000 ounces and then potentially 1 million ounces. Oliver, thank you very much for joining us this afternoon.
Thank you for having me, Paul. Good to see you.
And we're not finished yet here at the Rule Symposium. Later on, to wrap up the day, I have Rick Rule, our host. So stay tuned for more from the live stream here at the 2025 Rule Symposium.